Hello everybody and welcome to another episode of TA and Chill. I know I haven't uploaded in a while, so I figured with what's going on in GME it's probably a good time to post a little update. And this time, as always, I promise absolutely and positively to keep it under 10 minutes. So let's get into it. Um, let's work from the higher time frames down so that we can kind of place ourselves in the broader context of the trend here. As always, I haven't got anything written down, so I'm just basically reading it out to you as I see it. So we'll begin on the weekly time frame here. Let's have a look at the RSI. We're below 50. There's no positive divergence there. We are above the bearish control zone. So is the downtrend necessarily that strong on the higher time frames? No, I wouldn't say it was. Uh, in terms of the strength of the trend, we can look at the DMI here. Light green, positive trend, pink, negative trend. We're just in a period of flux like this, moving around the 24 level. So there isn't really a positive trend or a strong trend either towards the upside or the downside at the moment. One thing that we can see is that as price has increased up here, I mean the negative trend is still in place, but it is weakening, as you can see from the MACD histogram here. So overall, not a particularly strong trend either way. So no one is a clear winner here. So the ADX, the average directional trend of everything, is at 23, which is the bare minimum for there to be considered to be any kind of trend whatsoever. The volume overall is heading towards the positive side, so buyers may come back into control of this within the next couple of weeks here. It's not too far away. So let's look down at the daily time frame and we'll see what's going on here. So this is something that I discussed on Twitter a few days ago. This isn't really what we wanted to see here with the momentum, the relative strength index here moving underneath the neutral 50 level here. So the RSI is cutting through its own exponential moving average there, which is negative. Let's move on to the DMI again. We can see some flickering going on in the background here. You get these flickers when the slope of the ADX is at a certain angle, so it's not quite as strong as a flash, which would indicate, super strong volatility coming in. But this is definitely hinting at something, hinting at some kind of move coming up. Maybe you can see it on the lower time frames, which I'll go into in a second here. But on the daily time frame, we had that negative trend cross back here on the 22nd of February there. So the bears have been in control for um, a short period of time now. Let's look at the momentum, the MACD here, the histogram obviously declining as we move sideways here. So price is kind of chopping sideways as the kind of the goodwill and the buyers are somewhat fading out of the market here. This area here is the SHAF trend cycle indicator. It's similar to the MACD. I just kind of like its digital all in, all out kind of yes or no perspective on things. So the MACD is giving you kind of a more nuanced view of the momentum here, and the SHAF trend cycle is kind of telling you that the current trend is pretty much done. SHAF trend is normally used in Forex, but you can use it on lots of different assets. So you can see that the positive trend is dying out here, and we're possibly, moving into kind of another period of negative price action there. There are still um, there are still there is still positive buying volume here, which kind of goes some way to explaining why price hasn't collapsed just yet, and hopefully it won't. But I do expect there to be a dip coming soon. So that's covered the daily time frame. Let's look at the Bollinger Bands. I always set my Bollinger Bands to a look back period of 50 with a standard deviation of 2.1, which I find helps to iron out some of the noise. So we just get a better view of like the overall shifts in trend over time. So that was the first major trend shift over here back in May 2021, where it moved all the way up to 340, and you had that cross of the midline on the Bollinger Bands there. Crossing through normally portends a period of downwards price action. A little bit of positivity here, chopping sideways without any positive trend or any trend particularly being in charge here, as you can see by the ADX being kind of below this 23.6 level. So as time has gone on, had another cross down below the midline of the Bollinger Bands here, which led us to another negative cross there, which brought us down to this kind of $90 level here. Had a positive cross here, which brought us up to resistance at around about 123, 128, 129 there. And the negative trend here is crossing a significant level. DI minus here is crossing 23.6, with the positive trend weakening here and getting invalidated. The positive trend is extremely weak here. It's all 12 is virtually non-existent. So I would say that we have failed to cross this midline, which is what I would have really wanted to see, is that we were above 122 and maintaining that and getting a couple of candle body closes on the daily above that level, preferably with RSI being up here closer to the bullish control zone there. So yeah, overall, this is definitely pointing to some downside here. So Chef trend cycle is pointing down, MACD is pointing down. Volume is holding things up temporarily. That's why we haven't seen a dramatic shift just yet. Let's move down one more time scale down to the 4 hour, and let me just get rid of some of these drawings. There we go. Okay, so yeah, similar story on the 4 hour here. So we have these, I use these kind of colored Bollinger Bands here. They show the strength of the trend. So when ADX is positive here, you get a nice blue background, and when the trend starts fading out here, it goes orange and purple and then even white here. So at the absolute lowest possible strength of the trend here, you get this kind of flickering and flashing in the background. And what that tells you is that combined with the narrowing of the Bollinger Bands here, tells you that price is being compressed in a very small range. And as our friends at Trade Spotting and Rocky Outcrop like to say, low volatility begets high volatility. So we are expecting a period of high volatility coming in here. And if you look at this, the baseline here is also color coded. So along with the Bollinger Band squeezes, I'm also using the historical volatility percentile. So basically, over a certain look back period, volatility um, is is judged to be either relatively high or relatively low. So when you have very low volatility like this, it's nice and cool looking like this, icy cold. And when it's high volatility, you're getting these big moves either up or down in either direction. So it's not directional. You don't know which way it's going to go, but not from the volatility perspective per se. But there are other tools in the toolbox which can help us to tell which way price action is likely to go. So in a nutshell, we're looking at a period of extremely low volatility. So price has hardly moved at all recently. Um, on the 4 hour time frame here, we can see the positive buying volume beginning to fade out a little bit. The negative trend taking over, and the ADX, so the average of both of these, the positive and the negative trend. As the positive trend is declining, the negative trend is strengthening. So the ADX is climbing up here and reinforcing the negative trend there. So you'd only look to decide whether the trend was getting tired or not, probably around 38 here, and then you could re-examine that. So there's a lot of negativity going on the lower time frames here. So let's look at let's bring out Ichimoku so we can have an idea of which way the trend is going. So we'll turn on Ichimoku here, and I'll remove my annoying drawings again. Okay, so 12 minutes in, I know I promised that the video will be over by now, but I'm trying to give you a really in-depth breakdown of exactly what's going on here and exactly what you can expect over the coming days and perhaps even weeks of price action on GME. And I find that the 4 hour time frame is a nice compromise between the short term and the long term. So putting aside the oscillators for a moment, let's have a look at the trend with Ichimoku and PSAR. These PSAR is the little crosses here. That's parabolic stop and reverse from Wiles Wilder, the Dutch mathematician there. So let's see in terms of Ichimoku what's going on. So this is a very significant point in time for GameStop here. So you have had I'll just put an arrow on here. So look at this here. You've had a dead cross in Ichimoku terms, where a short term median average is crossing the medium term median average here. So kind of like a 5200 death cross in kind of Western terms. Um, but it's kind of above the cloud, so it's not completely conclusive, but it's definitely not positive either. What I was really eyeballing here was these kind of key levels of support, which I'll draw in for you now. So you had resistance up here at 123, call it 123.38 here. That was the top of the cloud here. That's a very significant point. And as you can see, price action didn't really seem very comfortable up there. So it broke through it, came back into the cloud, the Kumo, the zone of resistance, literally in Japanese. And then just kind of consolidated sideways for a number of days. Wasn't able to break above this level, but the medium term support here kind of held things up, and you could see it. A lot of doji candles here, a lot of indecision candles bouncing between this kind of 123, 114 level here, with some kind of I mean, you had a death cross here, but in the context of being inside the cloud, it's not a super strong sell signal, but it's just something to be aware of. The problem is that what I would have hoped would have happened is that we could have stayed above this kind of 118 level here, and all it had to do was kind of persist sideways and stay above that level, and you could have, ended up having a breakout. But the problem is that you have had this death cross now on the 4 hour. Parabolic stop and reverse is just not in your favor um, at the moment, and also had a Chico span death cross here. So current price action is kind of chopping through these historical levels of price action there. So what can we expect to happen here? Well, we're really looking for levels of support to support us and slow down the descent. So where could we see those? And I would use these kind of long flat areas of the Kumo here, because those were the those were the periods of time that where price action consolidated around a certain level for a longer period of time, and that's what creates these kind of long plateaus here. So they're very, very good for creating levels of support and resistance. So let's draw this one on here. We've got a level of support at 109.50 there. Potentially another level of support at 105. And as you can see from the length of time, the price action spent around 102 here. A lot of time in the median average is spent around here. I would probably draw on another level of support there, like so. So as price presumably moves down from this area, you could expect some some reactions from these levels of support and resistance here. It's unfortunate that we're below these kind of key levels of support here. We really wanted to stay above that. So as price moves down now, you're really looking towards these lower levels. Let's move up to the daily time frame. We can also find some additional levels of support. So you had a head and shoulders there kind of formation. So I could draw on another level of support down here at 93. You had candle body close down there before, and a hammer candle here where there was a lot of buying pressure, a lot of dojis. So 93.58 seems to be a pretty significant level. And yeah, zooming out a little bit, PSAR has not been in your favor for a number of days now, and it is slipping out of the bottom of the cloud here. And yeah, you're hoping to hold on to this kind of 109, 110 area, but with the volatility that is building up, as I mentioned on the Bollinger Bands, the next move down could be quite powerful. So I'll try not to let the let the video go on for much longer than this. So in a nutshell, yes, we haven't. This is essentially a failed breakout. We didn't manage to make it above 123. You're looking at these kind of lower levels here, hoping to find support down here. I'm personally kind of eyeballing this 93 this $93 mark here. There seems to have been a lot of historical support for that there. I don't know if there's something significant, maybe historically on the weekly time frame here. Yeah, not super long-term support, just kind of this 92 to 97 level here. In terms of being positive overall, I would have to say in the medium to long term, the trend is pretty sideways, as you can see from the shapes of the clouds here. So pushing sideways, the Tenkan-sen there pushing sideways. It's actually very good. It's unfortunate that it's being rejected from this kind of 123 level. But having said that, the force to the downside is actually not very strong. It doesn't really speak to there being a lot of conviction from the sellers here. So, there's probably going to be a dip. You will be able to get GameStop cheaper. Um, but as always, try to, trade safely, and don't FOMO into anything. Uh, Keep an eye on these kind of key levels of support and resistance and see how price reacts when it gets there, because I think that you would expect to see some good reactions here, and then hopefully over the next 2 to 3 weeks, the price action will start to flatten out, and instead of it being in this kind of long, many month long kind of downtrend, things will really start to, it sounds counterintuitive, but definitively going sideways as opposed to definitively going down. So if I draw on some trend lines here, I can also kind of convey what's been going on here. So we had this initial downtrend here. It's a little bit messy, but you get the picture. And then we broke out here. 97 would have been, or 87 there would have been a pretty great deal. And as you can see, we've been going sideways. We've kind of fallen out of this upward sloping channel. You've got the supply line at the top here and the demand line at the bottom, and the demand just hasn't been there to kind of push it up and away up here like we all want it to go. So yeah, we're looking towards the downside targets at the moment, but I would just suggest that people don't get too worried about it. Look for kind of bottoming formations here. Look for the trend to begin turning in the bull's favor. Maybe you get maybe you get one more touch of the bearish control zone here, and the bears get definitively rejected from it, and then we can start looking at these higher targets again, and look at the kind of long-term levels of resistance up here at 231, 258, and ultimately like 327. So I hope you enjoyed the video. If you have any questions, please feel free to reach out to me on Twitter. And thank you very much for taking the time to watch my video.